With tax season upon us, millions of Americans are anticipating refunds from the government. According to financial services company Bankrate, the average refund for last year, obviously, was about $2,800. That's a 1.4% drop from the previous year. Well, it's tempting to go maybe spend it on a new car or shopping. It is important to know the ways that money can really give your family a leg up financially. Here to tell us more about some suggestions on how you can help that money grow is Ashley Avery from First Florida Credit Union. Good morning. Thanks for being here. Do appreciate it.
Good morning.
You know, I think regardless of the amount of money it is, I think that maybe people don't realize that even just setting aside a small amount when you, and maybe you invested or whatever, when you go back in a couple of years, it's amazing how you can make it grow.
Absolutely, and this is a really great time to take that lump sum of money and do something active with it.
So first suggestion is maybe opening an emergency fund. I know that there are some people who've probably taken a really bad hit with the stock market, with everything, the concerns about coronavirus. In general, it's always a good idea to have something in reserve because you just don't ever know what's going to happen.
Absolutely. So an emergency fund is wonderful for several reasons. One, it's going to save you from having to use a credit card. It's going to save you from having to open up additional lines of credit if something happens. And we know life has a lot of variables. We know anything can happen. Also, your money is safe in a savings account. It's federally insured up to $250,000, and it's easily accessible. You can get in there anytime to transfer money, also to withdraw money.
And while, you know, depending upon what you're expecting back from that refund, the expectation is you should probably try to put aside maybe 3 to 6 months worth, you know, of emergency funds. And this is a good way to kind of get that started.
Yeah, absolutely. And I think that is what the experts say, 3 to 6 months of income into your emergency fund. We don't want that to discourage anyone. So if you get a lump sum of money that's not quite that amount, don't be discouraged by that. Put that into your emergency fund. We want you to feel comfortable and feel confident knowing that you are funded adequately when something happens.
What about reducing debt, particularly those high-interest credit cards?
Oh, yeah, absolutely. So reducing debt is actually one of the best ways that you can use the lump sum of money like your tax refund, because that's immediately going to give you a return on your investment because you're lowering the interest that you're paying to other people. And we work really hard for our money, so we want to keep as much of that money for ourselves as we can.
Do you have a suggestion on, you know, let's say somebody has 2 or 3 and they're all, you know, fairly high. Do you pay a little bit so that you can bring it down so that minimum drops, or is the best thing to kind of knock out one, you know, at a time?
Well, really that depends on how many you have. Some people can say that, you know, consolidating your debt into one credit card is a really great idea. There are balance transfers that you can do, but really taking any large, significant amount of money and putting it on any debt like that is going to reduce the interest rate or the interest that's accruing on that, and it's going to reduce how much your monthly payment is.
So if you want to kind of help that money grow a little bit, do you recommend, you know, an IRA, even a Roth IRA?
Sure. So now that, you know, if you have your savings accounts funded now, you've paid down that high interest debt, you're now looking for a different way to deposit that money or what you can do with that lump sum. Contributing that to an IRA is an excellent idea. Some people are a little bit concerned about the market, you know, being up and down. And if that's the case, think about a certificate of deposit. That's an excellent way to put your money in a safe account. Also federally insured up to $250,000. You have a locked-in interest rate. You have a locked-in term. You can feel very comfortable with that investment.
So what is that for those of our viewers who are unfamiliar with it?
Sure. It's a savings account, kind of the savings vehicle that you can put your money into. And the term that you decide on, so they have them at, you know, 9-month certificates, 12-month certificate, 24-month certificate, and it goes upward from there.
You can't take that money out in that time period.
That's exactly right. So what it does is you get a rate that accompanies that term that you decide on. Depending on what the options are, your money stays in there, and then it just stays there and it grows for you, and you don't take it out during that time.
Fantastic. Thank you for being here. Do appreciate
it.
And of course, for more information on a variety of financial topics, you can check out It's a Money Thing tab at firstflorida.org. We'll also have this interview posted on our website a little later this morning in case you missed some of it. Rich?